Okay, we should be all set to go. Thanks everybody for being here. Welcome to a special webinar where you will be provided the opportunity to join in with a group of traders who are consistently successful using the strategy that I developed and have been trading myself for over 10 years, the Double Eagle. You're going to learn why I call it the best kept secret in the world of options trading here in just a moment. Quickly, I'm not going to read this, but by joining us, you do agree to our disclaimer. Please read and understand the CFTC rule before you get involved in trading your real money. I am Marco, and I am the founder and CEO of DoubleEagleWorkshop.com. I'm also the co-owner and CEO of OptionsSlam.com. My name is Mark Letterman. Everyone knows me as Marco. A long time ago, probably more than 20 years ago, a trading buddy of mine gave me that name, and it just stuck. Support at doubleeagleworkshop.com. That is the best way to email me and get in touch with me. Support, pretty easy. Support at doubleeagleworkshop.com. Beautiful picture. Today's webinar is a promotion for the Double Eagle Workshop, which will begin Saturday, June 7th, which is 1 week from today. It begins quickly. It's an extensive learning process. Following the June 7th orientation session, there will be 6 more weekly sessions, each to be held on Mondays during market hours, specifically at 11 a.m. to 1 p.m. All sessions will go overtime. I can almost guarantee you that. All sessions will go overtime. You do not have to attend the sessions live. They will be recorded and provided to you in MP4 format promptly after they get rendered. It takes a while for the recordings to render and get sent out, but very shortly after. Don't worry about the trades that we enter during the live session. They are not that time sensitive. If we actually enter trades during a live session, you'll be able to enter those same trades the next day or the day after that, or you might choose to wait a few days. That's what's the Double Eagle is very flexible in that way. You do not, it's not like you have to, it's not super time sensitive, okay? You'll see as we move along through the workshop. I think there will be much for you to take away from today's webinar in the way of learning a few things, whether you decide to join us in the workshop or not. So thanks again for being here and taking the time to go through the webinar with us today. I have got this question before. Marco, if it's such a great strategy, how could it possibly still remain a secret? Because, as you know, I call it the best kept secret in the world of options trading. How could it still remain a secret? And there's 2 reasons that the Double Eagle continues to fly under the radar. First and foremost, it models up in options analysis software as a trade that has low to no probability of profit. It looks terrible when you model it up in options analysis software. This is a blown up screenshot of analysis software. This is right out of Thinkorswim. You see the 0 line here today. I'm not going to go through all of this stuff. You can come back to this. You can take a screenshot of it. You can see it in the recording. But I've labeled all the information, a lot of the information, not necessarily all of the information, but a lot of the information that's available in options analysis software. And this is obviously an iron condor. You see it, see the blue line there and the 0 line, and this is your profit, max profit. Here's your max loss, and all of these other important data points, information. The point here is that I want to make is that this is an iron condor, is very different from a double eagle. And the main difference that I want to point out is that an iron condor consists of vertical spreads. And verticals and most options trades that we get involved in have all the options involved in many of our trades, especially verticals, right, and iron condors and the like, all expire on the same day. They all share the same expiration. We have shorts, we have longs. Vertical spreads, you have these are short spreads, right? You got a short call spread and a short put spread. If you're not familiar with some of the lingo and all of that, stick around. It will all come to you. It'll all come together as we go through the training. Um, but the point is, they all expire on the same day, and the blue line here, this is the expiration date. This is what the P&L will look like on expiration day. In this particular picture here, the expiration day is March 18th. Okay, March 18th. And but the today line is February 19th. That's this purple line that's curved. And this today line evolves, and it is dynamic, and it changes as price changes, as time goes on, as implied volatilities change. That line will change dynamically throughout any trading day and day after day after day, all the way up until 318. But on 318, the P&L will be this. It will be this blue line. And if price ends up here between these 2 points, you will hit max profit. If price ends up down here past this point, you will hit max loss. And if it ends up somewhere in between this point and this point, just slightly off to the left, then the P&L will vary. So it is solid. It doesn't change. That is going to be very different in a double eagle. Very different. The blue line changes. So let's get back to answering the question. Why is the double eagle the most underutilized earning strategy out there? Why is it so unknown? Why is it the best kept secret? In the next slide is a risk graph of a typical double eagle as we see it modeled up in thinkorswim's analytical software on trade day. The day you initiate the trade, I think you will begin to understand why so many traders shy away from the double eagle. There's a ton of good news to follow, but this is what it looks like when you first initiate a double eagle, or worse. Sometimes they look a little better than this, but this is very typical. When we enter a double eagle, this is what the trade looks like. It looks like caca. It looks like there's no way to make a profit in this trade. The entire expiration day risk graph is below the zero line except for these little tiny peaks above, right? And I've put on many trades where those peaks are way down here, showing a negative trade, a huge loss, no potential. So if you are given this and say, hey, here's a great trade, your buddy rings you up and says, here's a great trade, take this trade, and you model it up in your options analysis software, and you see this risk graph, would you risk your money? There's no way. You're not going to risk your money in something that looks like this unless you know what we know as double eagle traders, and that is that things will get better as time evolves and implied volatilities change. The double eagle is put on, as you can see, as a delta neutral strategy. Here's price. This vertical line is representing price. And we are putting a strategy on that will win whether the price goes down or up. It can even go past these points, beyond these points, and still win because this whole risk graph will rise up. This is a trade that I shared at a recent MMU. MMU is a monthly meetup session. It's something that we have for our Double Eagle traders, the people who belong to our community of traders. We have monthly meetup sessions. The second Tuesday of every month. We've been having them for 6 years now. Okay, for 6 years we've been having these, and I shared those anyway. I share all my trades at the MMUs every month. So anyway, this is where we all get together and share ideas. There will be more about the MMU here a little bit later on. But we share experiences, we share our winning trades, we share our losing trades, adjustment ideas, tips and tricks. We share spreadsheets and tools that help us become better traders and assist us in managing our trades. We share all kinds of stuff in our MMU sessions, okay? So I'll talk a little bit more about MMUs later. But here's a trade that I shared recently. And this is when I first got, this is not the day I got in the trade, because when I get in the trade, prices, this is probably a day or two later. And price is usually going to be right very close as possible to the middle for the delta neutral setup. Okay, we're not trying to predict where market's going in a double eagle. And another really important thing, we're not holding this trade through the earnings event. So we completely avoid the risk of huge moves because of an earnings event. We avoid the implied volatility crush of an earnings event. Here's that same trade a month later. Yes, our trades last about a month. In fact, more than a month, most of them. Sometimes we need to get out early. Sometimes there's lots of reasons why we can't stay in a trade for the whole month. But the biggest profits come in the double eagle trading if you hold your trade the full length of time, because what happens is the double eagle is taking advantage of theta decay, and it's taking advantage of implied volatility. So the longer we hold our trade, the more theta we collect. And the longer we hold our trade, the more time we give implied volatility to build. I did a whole webinar on IV must build before IV crushes. In fact, I have a few slides here that go to that point, okay, coming up. But here's that same trade. Can I go back a slide? Here's what that trade looked like when I first put it on. Within the first few days of initiating the trade, this is what it looked like in risk profile. This is what it looked like when I took the trade off about a month later. I just had one, was it last week or the week before I closed, for 114% profit. We're going to initiate something coming up soon at doubleeagleworkshop.com that right now I'm thinking I'm calling it the 100%ers Club, so that all the traders that make over 100% on a double eagle trade will be able to, post at the 100%ers Club and talk about their experience. And it's just a fun thing that we're thinking about adding to our website. But anyway, let me just read through these quickly. Don't forget that I told you what I told you a few minutes ago, that the software only knows what it knows. In other words, when you model up a trade like an iron condor, the software knows what the P&L risk graph will look like come expiration day. But when you model up a double eagle, the software doesn't know what it's going to look like then. It only knows what it knows at that moment. In other words, the software, the options analytical software, can only predict the future based on the current set of historical statistics that it has access to. At doubleeagleworkshop.com, we have a research team that is on task all the time, every week of the year. And through our work, we know how to manipulate the software to provide it additional information to correct the P&L risk graph prediction model. And why do we do that? So that we can determine whether a candidate for a double eagle trade is a good candidate, whether it models up and looks like it's going to set up properly. We have a list of about 100 stocks that we follow, but we can't trade every stock every quarter. They don't all set up. Some stocks set up almost every quarter. Some stocks set up only once in a while. Every stock is different. Not all stocks work with the double eagle. Our list is only 100 long, 100 stocks long. Okay. Does it work on some stocks that aren't in our list? Yes, of course it does. But anyway, I'm going to show you a sample of things as we move along here. Our research team has been collecting information for many years on all of our stocks. We have almost 6,000 iterations of the double eagle in our master database. I'm going to show you a screenshot of that comes from our master database, which is a very powerful tool in and of itself. But our data goes back all the way back to 2014. That's when we started collecting data on this particular strategy. One of the pieces of information is how much IV build each stock has experienced in the run-up to earnings every quarter since we started following it. Now, we don't go back to 2014 on all 100 stocks. In fact, not all 100 stocks were even trading in 2014 necessarily. Or many of them might have been trading, but they were not at the level they didn't meet all the criteria to be a double eagle stock yet. So they didn't get added to our MST, our management statistics tool. Anyway, let me move on. With that information that we collect and the knowledge of just how to manipulate the modeling software, which is a little tricky, we can correct the risk graph before we enter the trade to better visualize its potential. Is it a good setup? Does it have the right risk to reward level? Does it have the probability of profit that we're looking for? And we can assess all that information via a modeling software such as Thinkorswim's analysis, what we call the AN tab, or the analytical software P&L risk graph tab. Now, there's other software that you can use. You don't have to have Thinkorswim. You can use OptionNet Explorer or Option Strat, and there are others. Okay. I had a trader the other day show me one from Fidelity. Even Fidelity has a pretty good option analysis software built into their program, which I was a little surprised to see that. So anyway, we teach all of this in the workshop, and as participants, you will have access to our MST, our Management Statistics tool, which provides this proprietary collection of data in summary form. You too will be able to do what I show you here with uncanny results. Earnings traders are familiar with IV crush. We talk about it all the time in the OptionSlam.com webinars. Will the company meet the street's expectations? What if they beat? Or, oh my, what if they miss an earnings event? The double eagle is, don't be confused. The double eagle is an earnings trade, but we don't hold it through the earnings event. We close it right before the earnings event, okay? Many earnings traders are looking to exploit implied volatility crush by selling naked strangles and iron condors and such. So many other strategies where traders are looking to exploit the IV crush. Others only fear the IV crush in the hopes that it will not destroy any hope of profit in their back ratio or long calls or long puts that they've put on. Implied volatility is a powerful force that has very much to do with the value of options. As we approach a stock's earnings date, the anticipation is growing. The anticipation of the event, the earnings event, is coming up. That anticipation is growing, and the closer we get, the more the anticipation builds. And this is what causes implied volatility to build. This fuels the demand for options. And as the demand increases, so does the price of options increase via something what we call implied volatility build. IV must build before it can crush. But when the earnings are finally released, boom, the inflated implied volatility pops like a balloon. Options premiums get decimated, both puts and calls. Admit it, you've been there. Bought a call because you were confident the stock was going to go up after earnings. And you were right, it did go up. But somehow you still lost money. All new options traders experience this. All new options traders experience this. That is the result of implied volatility crush. Before IV can crush, it must first build. What most traders forget about is that before IV can crush, it must first build. This process starts many weeks before the earnings event. As double eagle traders, we exploit what most people don't see, the IV building and supporting option premium against theta decay. Supporting option premium against theta decay, because in a double eagle, we are also buying options and they are also exposed to theta decay. We are selling options that are fully exposed to theta decay and they do not get the benefit of implied volatility build. Our longs do. But not all options get IV build, so we sell those options and benefit from the theta decay they provide, and we buy the options that do get the IV build so that that option premium is supported by implied volatility build, offsetting the theta decay in our longs. This is another trade that I shared at a recent MMU. During our MMUs, I share all of my trades. If we have time, if we don't have too many presenters, but I almost always share all of my trades, all of my winners, all my losers. And this is the primary way in which I share my trades. I mark up a price chart and I show these white bubbles are when I took action. This is when I initiated the trade. This is a description of the trade. This is a 2 weeks of separation trade. This is slightly different than a conventional double eagle. We have a few varieties of the double eagle, depending on the circumstances of what's happening when we enter the trade. And of course, I teach all the details, everything in great detail through the workshop. Okay, but anyway, let me just talk about what this simple little picture represents. This represents my strikes. Okay, this represents my strikes, and this is where price is. This is a daily price chart. And a $5 debit means it costs me $500 per contract to get into this trade. Some trades are we do trades sometimes for $50, sometimes for $1,000, and everywhere in between. Okay, depends on the stock, depends on the circumstances. Of course, not everybody can afford to do the $1,000 contract trades, especially if you're doing 2 or 3 or 4 of them or more. Many of our traders are very large size traders. Many of our traders are not. Many of our traders are very small size traders, and they can't ever do a $1,000 per contract trade, okay? Because they just don't have an account size big enough to support that kind of risk. But anyway, let's see, close early with price hovering around the put strike for 24% profit. I've got a few slides here that I probably could have done without. Entered this trade on 2/29 23. Risk graph shown without anticipated IV build. And then with the help of our Double Eagle management statistics tool, I knew how much implied volatility to model in so that I could determine what's this going to look like? What is this risk graph going to look like come front expiration day, which in this particular case was March 11th, 23. And the date I took this picture was February 11th, 23, a month earlier. Okay. It looked like this when I entered the trade. It predicted that the trade would look like this on that same day. Okay. And then, is this the same trade? Let me just back up one slide to see. Yes, it's the exact same trade. It's the exact same trade. And here's what the trade looked like. Only what? 22. So 11 days later, okay, 10 calendar days later, okay, so less than 2 weeks later, or about exactly 2 weeks later, see the risk graph is rising up. These peaks are now somewhat above the zero line. And guess what? I've already got 25% profit. And 13 days, I detailed it here. Okay, so the entered on 2/9, $339 of profit against $1,340 of risk. That's what it cost me to get into 4 of these at $335 each. Okay, and I got 25% profit. Guess what? I'm taking some profit off the table. I'm going to close one. Very likely, I closed one. But I teach all of that in the workshop, how to know when to close them, when to hold them, when to fold them, all that. Okay. And then I want to let as many ride as long as possible, like I explained before, because the biggest profits in a double eagle come in that final week, that last week of the trade, the week right finally before you get to the earnings date itself. So you got to know when to hold them and when to fold them. The expiration dates chosen for the trade must follow the guidelines in their respective relationship to the earnings date itself. You need to know which options to buy and which to sell. Timing is critical. Don't enter too early, and waiting too long decimates your risk to reward ratios. So we pay very close attention to probability of profit, risk to reward ratios, and a bunch of other stuff. Our earnings date research is critical to the success of the double eagle trader. If a trade doesn't model up and show us that it has really good potential, we pass on that trade. It'll come back 3 months from now. Don't worry about it. It will be back. There's plenty of other stocks to choose from today. They don't all model up every quarter. We've developed a sophisticated set of tools to predict when the next earnings date will be. Why do we do that? Well, because 2/3 of our trades we initiate before the company has announced their earnings date. Why do we do that? It's very risky to do that. Because if we're wrong about the earnings date, our trade becomes what we've given the name. It becomes a BDT, a busted date trade, and those are instantaneous losers. But the good news is we are very good at predicting when the next earnings date is going to be, and we have modified the double eagle to take much of that risk out so that we can do a modified double eagle variety so that we can enter trades before we definitively know when the earnings date is going to be. So it's really a whole other subject, not time to get into that whole estimated date thing, but the fact is that 2/3 of the trades we enter, well, people say, well, why don't you just wait for the earnings date to be announced by the company and then enter the double eagle? Because it's too late. We cannot be entering double eagles a week or 2 or 3 weeks before the earnings date. That is too late. But if we wait that long, and not only that, first of all, if we wait that long, we give up several weeks of theta decay we could have earned had we entered the trade earlier. We also give up several weeks of implied volatility that's already built if we wait that long to get into the trade. So we need to get into the trades early enough so that we are selling the maximum amount of premium in our short contracts and giving our long contracts the maximum amount of time and to build IV and get in them before IV really starts to spike, because IV builds many weeks before the earnings event. It starts to build, but it's kind of slow at first. But every point counts. Vega is a very powerful Greek that really, as you saw, how much profit is available in these trades. That's due to implied volatility build. I'm scratching the surface here. And people say, well, why does that workshop take so long? Well, because there's a lot to learn, and there's a lot we have to. I go through every experience and every possible thing that can happen to a double eagle trade throughout the workshop. Every good thing and more importantly, every negative, bad thing that can happen. Everything that could go wrong, we need to cover it in the workshop. So there's so much to learn. Let me get back to my PowerPoint presentation here. Reason number 2 why the double eagle. What's reason number 1? Because the risk graph looks terrible on entry day of the trade. And most people, even if they come up with this concept and they model the trade up and they look at it in analysis software, they go, yeah, never mind, I'm not interested in that kind of a risk graph. That looks like it doesn't have any possibility of winning. That's the first reason why the double eagle is still the best kept secret in the world of options trading. The second reason, and this is probably true of most traders, because a lot of people try to trade the double eagle without our help, without doubleeagleworkshop.com and the MST, the management statistics tool, and all the data that we've been collecting for over 10 years now. Without the benefit of that data and information and knowing what to expect based on historical results of, like I said, almost 6,000 iterations of the double eagle in our master database now, it's very difficult to keep track and stay organized. There's too much work to do to get organized, collect all the data, do for every earnings event, for every stock, and assemble it, assimilate it, analyze it, put it together, and provide it in a reasonable format within which traders can pull from. Anyway, that's why we have a team of traders. I couldn't do it. I tried doing this by myself when I first developed the strategy many years ago. I was overwhelmed. I couldn't keep up with the work. And so I pulled a couple of trading buddies in, and they started seeing the power of my strategy, and they started helping me, and we developed a team of people that we work together now because it's just too much for any one person to do. Well, let me move on. So anyway, we notify our traders more than 2 weeks in advance of the stocks to start watching, to start preparing for. 2 weeks from now, this certain stock is going. I used to say XYZ, but now XYZ is actually a symbol. Square changed their name, their symbol to XYZ. So anyway, let me move on here. No one person could possibly keep up with the work it takes to gather all the information and maintain it in an organized fashion. Believe me, I've tried it. It requires a team effort. So we have a team. We've built a team, and we put all this, we collect the data every day, every week of the year, and then we publish it via our MST. We put together a team of double eagle traders, and we work together year round to collect data, estimate ER dates, and maintain a database of statistics specific to our stock list. We share this information with our members to enable well-informed trading decisions. We do all of the above by providing the management statistics tool. We call it the MST. Here is a glimpse of our MST. Okay? Lots of numbers, lots of stuff. It's not too complicated, really. It's once I explain it to you, you will totally understand it, and you will find it very easy to read, and you will be able to interpret the information and the data here and apply it to your trade. Before you even ask, the MST is not available as a standalone product. You need to take the workshop and learn how to trade the strategy properly. I will not provide the MST to anyone unless they've taken the workshop first. We have an excellent reputation. People love the double eagle, but I cannot put this data out to people who don't even know how to interpret it. We spend the very first, so we're going to have a Saturday orientation class a week from today, and then very immediately, 3 days later, on that Monday, the very first Monday after that Saturday orientation, we will spend almost the entire class. We will spend the entire class. Teaching you how to interpret this data and information and how to apply it to a live opportunity. The symbols I've got blurred out here. I've got the specific earnings dates blurred out here. I've got the actual price of the underlying stock a little bit blurred out there, as well as another symbol, just because why is symbol here twice? It's the same symbol here as it is over here. It's just that it's hard to follow the line across, so we just put another symbol column over on the right. So anyway, I'll get into all this, but just quickly, briefly, there's a predicted press release date. That's when we predict the company is going to actually announce their earnings date. This column is the earnings date. This is our estimated date. Unless it's highlighted in green, then it's a confirmed date. You can see most stocks are not confirmed at the time we enter the trade. 0 day, let me jump, expiration, suggested trade date. How many days away is that? Well, it's 2 weeks away in this particular example. 14 calendar days from now is when this stock will be up for trading. That's when this stock will actually be way down here on the list. It'll say 0 on the suggested trade date. Okay. So we're giving a heads up. We're saying, traders, here's the stocks that are coming up 2 weeks from now. Can you enter them early? Yes, that's a great question. You can enter. In fact, there's a lot of trades that just got entered yesterday. In our Discord channel, a lot of traders were talking about trades they entered They divulge exactly what trade they entered, along with the strikes, the expiration dates, the debit that they paid. That's all huge, great information. That's all type of stuff that we share all the time in our Discord channel. I need to move along here. I see I'm already running out of time. We have comments here that are specific to how to enter a trade, variations of trades, and all these statistics. Again, I see that I'm running out of time. I went off on some tangents, and I'm hurting for time, so I need to move along. But this is a glimpse of what our MST looks like. And there's implied volatility statistics here. There's profit information here available. There's strike spread and debit. How much does it cost to get into this trade? So when you model up a trade and you say, okay, that's going to cost, it looks like the midpoint price is $353 to get into this double eagle. Is that a good price or a bad price? Well, how do you know? We give you information how to know if that's a high price or a low price, okay, by giving you information, statistics. See this last number here in this column here? This last number is the number of iterations in our master database. We have 41 examples. That's over 10 years of information on this particular stock in our master database that all of this other data is summarized from. All right, let me move on. I gotta get moving on here. All right, now our master database of historical trades is the Double Eagle. This is a tool that I pull out of our master database, and what I did is I filtered our master database. Here's the filters I applied. All trades initiated since August 31st, 2020. Why did I do that? Why did I omit the August prior the rest of the earlier part of the year of 2020? Because the profits were too huge. I got a story I'm going to tell you. I hate to digress again, but in March of 2020, and we all know that 2020 is COVID, okay? The pandemic, right? Some people call it the scamdemic, but I don't want to get political here. Why did I omit that prior to that? Because the profits were huge, too big, okay? The profits were too big because here's the story. I had a workshop planned for March of 2020. Or maybe it was April of 2020. I can't remember exactly. And people had already paid to attend to the workshop. And then the market started crashing because of the COVID scare, right? At that time, it was just a scare. It was just starting to become the thing. And I canceled the workshop because we had never traded through a bear market before. We had never we weren't trading the Double Eagle back in 2008, okay, when the market went into a bear market in 2007, late 2007, 2008. We weren't trading it then. So I didn't know how the Double Eagle would perform. So I returned everybody's money. And that's when I initiated the monthly meetup sessions. We started the monthly meetup sessions in April of 2020. And we've been doing them every month ever since. And it turns out that the Double Eagle performed fantastic during COVID and the COVID crash, as well as the COVID recovery. The Double Eagle performed fantastic, and it would skew the results of this graph positively. That's why I eliminated it, okay? Not because I'm trying to hide something, because I'm trying to show more reality of what the P&L curve looks like in Double Eagle trades without that period of time where the Double Eagle outperformed. And I'll explain in the workshop why the Double Eagle outperformed in that time period. And did we have losses? Yeah, we had big losses during that period too. But our big winners were so big that they outperformed our losses. That's what happens all the time. Take a look. Take a look. Here's Here's all of the trades. How many trades are there? 1,786 trades represented in this green line. What is the green line? It is the, oh shoot, oh yeah, right here. Green line is the sum percent profit and loss. What does this graph represent? It represents 1,786 trades, double eagle trades, conventional trades only, not the varieties. Okay, now the varieties, I could develop another chart to show that too. It won't be quite as good as this, but it's still very positive because the other varieties, the conventional double eagle outperforms the varieties, but the varieties are things you want to take on anyway, just because they are they're the variations. I call them varieties. The variations of the double eagle: 1,262 wins, 524 losses, 71% win rate, 29% losers. This is very typical of any double eagle trader. Okay, this is where, if you keep track of your trades, this is very close to what you're going to find is true for you once you learn the strategy. Wins. Here's really good news. Average win, $206. Average loser, $166. So you win more than you lose when you win. And you win most of the time and lose fewer of the times. Okay, so here's a stock that I trade almost every quarter. Some stocks, like I mentioned, do set up almost every quarter. And here's a stock that here's a quarter. You see, there's event, there's an earnings event, and then when I took this picture, I'm just getting into another earnings event coming up in about a month. So here's trade. Take some off at 35% profit. It held it a little longer and it didn't get more profitable. Usually they get more profitable as time goes on, but it all depends. It depends on a few things, but it depends on where is price and is IV coming in at the rate that we expected it. Those are the two main things. Okay, so let's see here. Here's one. To close a quarter of my contracts off at 34% profit here. Took another quarter off at 53% profit. Took another quarter off at 53% profit. Closed the final quarter at 29% profit. Okay, and then here I'm just starting a trade. All right. So let's. Here's the invitation. Come fly with us, Double Eagle traders. We're anxious to welcome you to our community of Double Eagle traders where you will enjoy many valuable benefits, including participate in our monthly meetup sessions, join in the active trading discussions at our private Discord channel, enjoy insider information via 24/7 access to our proprietary information via the MST. The tuition is $1,695. I'm not much of a salesman. I'm not going to say, well, it's worth $3,900, but because you're here today, you get a discount and it's only. I'm not going to say this and that and all the other things. I know I probably should. I should be a much better marketer and salesperson than I am. I don't have time for all that, to be quite honest with you. I just put it out there as I put it out there. I put it out there the way it is. This is the price. And if you can't afford it, you probably shouldn't be trading to start with. But if you just want to learn and you can't afford it, you can finance it through PayPal. PayPal will finance it interest-free, I think, for 6 months. I have provided you with some solid evidence why you should participate in the Double Eagle Workshop. It is sure to change your trading forever. Tuition includes the first 3 months of the subscriber benefits package, which is those things that I just mentioned. The subscriber benefits package includes MMU sessions, including archives of recorded MMU sessions, and every month a new one. Our Discord channel, available it's 24/7, very active private Discord channel exclusive to Double Eagle traders, the MST, and more actually. There's a few other things too that are included as part of our subscribers benefits package. The management statistics tool, quickly review. The PDF is available on demand in your browser every day. It is updated every day. I don't know if I say that, but it is updated. Oh yeah, updated daily. It provides critical information about the stocks that are available to trade utilizing, including expiration cycles to utilize, when to initiate the trade, expected, anticipated, implied volatility build, to model your options in your analytical software, whether you're using Thinkorswim or some other analyze software. You do need analyze software. That is one thing you need. It is critical that you have some kind of analyze software. If you don't have any now, I can guide you as to what to get. Thinkorswim is free if you have Thinkorswim available in your country. Some people don't have it available, but it's really expanded now. I think all of Europe, can get Thinkorswim. Anyway, but there are other software packages. There's more and more here. There's more to what I've said here, but that's the MST. Now, monthly meetup sessions. Scratching the surface. Monthly meetup sessions are traders share studies, spreadsheets, tools they've created, current trades, current open trades, closed trades, adjustment ideas, all kinds of things are shared at our monthly meetup sessions. We have some traders who are really big on technicals, and they share with us some of the things that in the way of technical analysis and how to apply that to initiating and managing double eagle trades, for example. Like I mentioned, if there's time, and there usually is, I personally go through all of my trades from the previous month, every winner, every loser, in full detail, full transparency. Many traders divulge their, in the Discord channel, many traders divulge their exact trade details. Just yesterday, I saw a bunch of trades people were talking about in the Discord channel. They were saying what trade they got in, what strikes they used, what their debit was. That's very helpful information. It's because we don't know when we model up a trade, our software gives us a midpoint price. It says, okay, this trade's going to cost $334 or $117 or whatever the case might be. Have you ever clicked the button and say send the order, and bing, you get filled right away? You know you paid too much. So I teach you how to put in an offer lower than because a couple days ago, we had a trader get in way below the midpoint price on a double eagle trade, way below the midpoint price. But more often, we have traders that we have to pay a little more than the midpoint price. But how much more? That's going to vary with every stock. And if traders share that information and say, hey, I got filled at $2.28, which is actually a price that I remember from yesterday, on a specific trade that somebody got into, $2.28, and somebody says, oh, I got in for $2.25, whatever. And the midpoint price was $2.21 at the time, or $2.20 at the time. So now I've got an idea how much I'm going to have to pay without overpaying. It's really good information. Anyway, the double eagle, other trade ideas posted in the Discord that are double eagles, but they're not based on earnings. There's other catalysts. There's other things that we can apply the concepts of the double eagle to that aren't revolving around an earnings date. Here's one that I posted. I can't show you the Discord itself because a lot of people are using their full real names, and really it's a private channel. I shouldn't share, but I can share what I posted in the Discord. And here's one that I posted. This was on November 25th. I found this information. I was actually looking for a PDUFA announcement I go to a site and I follow PDUFA announcements. And I was looking for, maybe there's a trade based on. Didn't find one, but I found this. I found three things happening with Lilly, LLY. I found three things happening, all three big events happening, all in the same week, talking about drugs that they had coming up in the pipeline for approval. Not the actual PDUFA itself, but presentations regarding these drugs that will be up for PDUFA sometime shortly. So I thought, you know what, I'm going to give this a shot. So I did. I put the trade on right here on this day. I posted this all in the. But here's the trade. I posted three drug presentations during the week ending 12/13 as the catalyst instead of an earnings event. I put on one contract at $9.98, almost $1,000 to get into one contract. The very next day, the Biden administration had some kind of a news event about obesity drugs and somehow, some policy related. And so what did I do? Let's see, obesity drug news, add one at 420. Decimated the implied volatility. I added another contract at $4.20. Up here, I added another. You see, I had my original two strikes. Now I got a third strike, okay? And it cost me another $4.20 to get into that one. So this is an adjustment. This is one of the adjustments. I teach many ways to adjust the double eagle, but this is one of the adjustments that I teach. And I added another bit of risk. Now, I only made 11% profit on this trade. Not spectacular, but adjustments are, if I didn't make the adjustment, I definitely would have lost money. I would have lost money on this trade. Okay, but I knew what to do, how to do it, and boom, turns into an 11% profit in what? 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 9 trading days. Boom, 11% profit against $1,400 of risk. Okay, so here's another one. Another example of a double eagle trade that does not evolve around earnings. Now these are, you need to be on your toes, but when I find them, I post them in the Discord channel. So part of this is not only to show you how the double eagle performs, but also how the Discord is so very valuable to all of us double eagle traders. We are there helping each other out every single day. So this is, I call it Marco's presidential election trade. Now, I wish I would have thought of this a few weeks before I did, but due to one of the traders posting in the Discord about how the SPY was in backwardation. If you don't know what backwardation is, you'll learn about it in the workshop. But those of you who are familiar with contango and backwardation, or a table, he posted a table of how the SPY is in backwardation. And as well as the SPX. Now, I just did this trade on the SPY. If you're a big trader, I'm not a big trader. I'm a very small size trader. I don't put a lot of money at risk in trading. I have lots of money, but I don't need to trade. So anyway, that's all besides the point. I trade because I love it and I want to stay involved so that I can teach people how to trade. That's why I trade, so that I'm involved and I can stay focused, and I'm forced to be involved because I got money on the table. Not a ton of money, I just trade small. But anyway, that's all about me. And I don't want this to be about me. I want it to be about you learning to trade and become consistently profitable. Anyway, this is the presidential election trade. What's the event? It's not an earnings event. It's November 4th. Okay, November 4th. So what do? I set up a trade that I know I'm going to get out of before November 4th. I back tested it here. I back tested the election day trade equivalent to entering today in terms. This is my exact post in the Discord. You can find it when you join us. You'll be able to search for election day trade or search for any word in here and you'll find it. This exact post. And I back tested it and found that the election trade has been profitable the previous few election cycles. Okay, so I thought, well, it's a little bit late to get into this trade, but I'm going to give it a shot anyway. So I did 3 contracts at $372 each, and I was able to close 2 of them at 34% profit and 1 of them at 36% profit. And lots of traders followed me on this and the Eli Lilly trade. Okay, because I posted it in the Discord. So that's the main reason I'm showing you this. Is not it's really to illustrate how powerful our Discord channel is. Okay, so the Double Eagle has spared many people from the demise of their trading careers. This is an actual Beth is still, she was one of the very first people to take the Double Eagle course many years ago. She says, I'm surely one of Option Slam's biggest fans, for I do very well with the Double Eagle. This is when the Double Eagle is still at Option Slam. We've removed the Double Eagle from Option Slam. The Double Eagle is its own website now. It is its own entity now. Honestly, I was just about to give up on options trading, for it just seemed like another pipe dream. I'm not saying that the Double Eagle is easy, though. It is demanding, requires concentration, and staying on top of the market conditions. The Double Eagle is my main trading strategy now, and I found by focusing on just one and not spreading my attention to other strategies, it has enriched and deepened my understanding of the whole process. I think you will understand when I say that after a while you just get a feel about the trades, and this comes from doing the strategy over and over and over again under so many different market conditions. She's still a Double Eagle trader. She's still trading she, unfortunately, the Discord channel is optional. Beth says, well, I'm not really into social media, and so she doesn't really participate at the Discord channel. A lot of traders don't. A lot of other traders just go in there and lurk. They just will go and watch what's going on, and they don't ever post anything. That's fine too, okay? But it's available. It's an available tool. Let's jump over to the website a quick minute, and I'll just show you around quickly here. The website is doubleeagleworkshop.com. Okay, doubleeagleworkshop.com. You can go there. I encourage you to read the testimonials. I don't have a ton of testimonials. I have a ton of testimonials, but I only posted a few of them in here. I'm going to switch them up. There's so many other really good ones that I have that I'm just so busy. I don't have time to do all this website maintenance stuff. I just don't. But here's a bunch of testimonials in here. Is Beth's even in here? Let's see. Judge, Leonard, Elias, Mike. No, Beth's isn't even in here. Here's Bakeem. Bakeem is also one of the very first people. He won back in those. This is back in 2018. Back in those days, the Options Tribe used to put on a contest for, I think, affiliate. I think they're affiliated with SMB, but I'm not sure. But they're affiliated with some proprietary trading firm, and then they would put on a 6-month contest, and you trade whatever you want to trade. And the winner of that contest, they would fund a $1 million trading account. They would fund it. They would give you, they open up an account for $1 million and let you trade it, their money. And then you keep a large percentage of the profits, and they get a smaller percentage of the profits. Bakeem won that contest in 2018, fall of 2017 through spring of 2018. It was a 6-month contest. He smoked the competition with a 36% P&L. And in this contest, they had to prove their results. They had to send in all their brokerage statements. They had to supply their brokerage statements because they're talking serious money. So anyway, that's probably Nelson. He's a pilot. Nelson, there's testimonials. I encourage you to read those. The workshop schedule. And here it is. It lays it out, Saturday. And then the orientation session, June 7th, a week from today. And right away, 3 days later, the Mondays start. Every Monday for 1, 2, 3, 4, 5, 6. Now, there's an explanation here of what's going to be involved in those sessions. I can't guarantee that I'm going to stick exactly by that, but for the most part, this is the agenda of the sessions. Okay, we'll be trading, we'll be analyzing trades, we'll be managing trades, but there will be PowerPoint presentations where I will be teaching a set of information, a set of instructions, a set of do's and don'ts, a set of if you are ready, jump in, take the plunge, become a consistently profitable trader with the team. You can, I think, if you click this Join Now button, let me try it once. Sure enough, you click that Join Now button, and it takes you to a place where you can sign up for the workshop. You just select that, and then it'll give you choices as to how you want to pay. I've had this happen before, so I made a rule. I cannot give away the MST until you go through this first Monday class that is primarily focused on reading and interpreting the MST. Once I've taught you how to properly interpret and use the information in the MST, then you will have access to the subscriber benefits tab at the site. The subscriber benefits tab at the site will give you access to the MST, the archives of monthly meetup sessions. I can click on that and show you that there's a bunch of, I've started putting in descriptions of what happened in each of these monthly. Here's the May session, the April session, the March session. I started putting in a description of what we included. You can see I've got a lot of work to do. Again, I'm busy, but the sessions are there, available. You can click on any session, go back and see historical MMU sessions. They're all worth watching. There's lessons to be learned from all of them. The Discord, access to the Discord channel here. Double Eagle support files. This is another thing that's included in the subscriber benefits tab that I didn't talk about previously. But anyway, there's a bunch of files here. There is, trade entry flow diagram, something that we learn about in the workshop called delta inversion. Very important topic for double eagle traders. If you don't understand delta inversion, you are going to get yourself in trouble. You're going to have to learn about a bunch of stuff. Trade tracker and the Riv tool. These are really, I just don't have time to go into all that stuff. Everything will be gone into in great detail in the workshop. I promise you. You will not be able to get through without having all of your questions answered. And if I can't answer them by email, I'll get on the phone with you. If I can't answer by phone, we'll get on and have a GoToWebinar session, one-on-one, private. I will answer everybody's questions about double eagle trading, not about how to manage your marital situation. No, I can't help you there. But let's see. Let me see if I can find any questions that came in. I've got a bunch of questions. Let's see. Is it true that this is the only trade I do for earnings? No, it's not true that it's the only trade I do for the earnings. It's true that it is. The double eagle consumes, or I am consumed, or my trading is 90%, at least 90% double eagle trading, probably more. It depends on how you want to measure it. Probably at least 90% of my trading is the double eagle. I dabble in some other stuff. I teach all kinds of strategies. I've even developed some new strategies that many of you never heard of before that you'll find in the Option Slam webinars. Okay, the ZIMS trade, the SWIC trade. My win rate is about 70%. It's going to vary. It's going to vary every month, but over the years, it's about 70%. And I show you you'll see when you go and look at the MMUs, and you saw there's a ton of them. There's a ton of them. Where are they? MMUs. You go and you'll see. Go back and scroll through, and you can go see all my trades, winners and losers, in all of these MMUs. Okay. And how far back do I go here? Back to 2022. Now, there are MMUs prior to that, all the way back to April of 2020. They're not archived here. some of that stuff just gets stale, and I don't know that anybody even goes all the way back to all of 2022. But we're all about transparency here. How can we be part of your monthly meeting? But it's part of the deal. When you sign up for the workshop, you get the first. Okay, I'm glad you asked that question because I forgot to mention this. You get the first 90 days, the first 3 months of the subscriber benefits tab. Everything here, including the monthly meetup, including the MST, including the Discord, including the support files, including email support, as well as, like I said, telephone and private GoToWebinar support if we need to go there. No problem. I do it all the time. Every week, believe me, I have meetings with traders. How do you become part of all of this good stuff? Pay the $16.95. Just go to, where was it? You'll have that for the first 3 months. After the first 3 months, the subscriber benefits, if you want to continue, and it is optional. Can you trade the Double Eagle without the subscriber benefits access? Yes, you can. A few people have tried. Most of them end up coming back and just subscribing because it's so cheap. It's $119 per quarter, not per month, not $119 monthly, $119 quarterly, okay? Or $419 for the year. So there's like a 12% discount if you sign up for the whole year. So quite a lot of people, they end up coming back because we take all these benefits are worth so much more money than that. And we take all the work out of staying organized for you through the MST. So, yeah, so a very good question. Thanks for bringing that up. How important is good analysis software? Very important. Got to have good analysis software. Is there an archive of old videos we could watch of old orientation sessions? No. Orientation session divulges too much about the strategy. Orientation sessions divulge a lot of information about the strategy, the history of the strategy, how the strategy works. No, that is part of the workshop. All right, how much money do I need? Here's another way to say it. What's the minimum capital? So this is an awesome question. So let me say it this way. The more money, the better. Okay, why? Why do you say it that way, Marco? Because the more money you have in your trading account, the easier it is for you to put on a trade and trade it confidently without fear. It's really important to trade without fear. If you've got a $2,000 account, and I have taught the Double Eagle Trader to people with $2,000 accounts, I still have some traders trading the Double Eagle that have very small accounts, under 5 and 10 grand, okay? So can you trade the Double Eagle with a small account? Yes, but you're going to be limited as to, first of all, as to what the opportunities. You're not going to be able to trade every stock that's on the MST, okay? Because with a small account, some of those stocks cost $500 per contract just to enter. And I am a very strong believer that you should do a minimum of 3 contracts whenever you can possibly afford it, and it's within your comfort zone. So a minimum of 3 contracts of a $500 debit for a Double Eagle is $1,500 at risk. You're not going to be able to do $1,500 at risk if you've got a $2,000 account. I'm sorry, you can't do it. You will be trading with scared money, because if you lose money, if that's part of the 1/3 if your first trade is part of the 1/3 that becomes a loser, then guess what? You just lost 3/4 of your account in your very first Double Eagle trade. So you cannot trade scared money. So here's a better answer to your question, or the rest of the answer to your question is, if you've got a $50,000 account, you'll be able to trade pretty much every stock that's on the MST. and be comfortable. I have a guideline that I will teach and promote in the workshop, and I'll just give you the brief story on it right now. Hang on a quick minute. How much experience do I need to trade of options trading? I've taught beginner traders. Listen, the Double Eagle Workshop is the fast track to becoming a consistently profitable, successful trader. It's the fast track. It is not a beginner's strategy, but I can teach a beginner to become a trader by teaching the beginner the Double Eagle. You need to do it slowly. You need to do it with paper trading. Unless you have a very large account and you're a beginner trader, then you can dabble with very small quantities of real money, okay? So we'll talk more about all that stuff in the workshop. Let me see if there's any other questions. Margin impact. There's no margin impact. Now, some people live in the UK and they go, well, my broker won't let me trade the Double Eagle because it's too much margin. I don't understand that, because it's a debit trade. It's a defined risk trade. I don't know what they mean by that their broker says there's too much, there's all this margin. It's the most you can lose is $500. If it costs $500 to put on a Double Eagle, and you put on one contract of a $500 trade. Now, I don't recommend one contract. I really push 3 contracts, because that way you can scale out, take some off at 25% profit, take some off at 45% profit, hold the final contract until the end, where you might be able to get into the 100%ers club. Okay, but anyway, if you put in up $500, that's the most you can lose. You can't lose any more than $500. There is no margin. There's no stop loss needed. You just risk as much money as you're willing to lose. What's the chances of losing 100%? Very, very, very low, but it does happen occasionally. We had a big loser recently on a stock that pre-announced their earnings. They had confirmed an earnings date, and then they pre-announced a couple of weeks before the earnings event that they were going to have really bad earnings. And everybody lost almost 100% of their bet, okay? Their debit of the on the trade. One of our traders, and you'll see it right in an MMU, right in a recent MMU, one of our traders lost 25 grand on that event. But guess what? That trader ended up profitable for the month anyway. Even though that trader lost 20, and you'll see it, it's in an MMU, it's recorded and it's live. It's right, we record the MMUs live, just like I'm recording this session live right now. One of our traders lost 25 grand on that trade, and by the end of that month, he still ends up profitable because he had enough other trades on. I think if you got 10 or 20 grand, you can trade. You're well equipped. You will not be able to take advantage of all the trades. I will push this throughout the workshop. Don't trade with scared money. The way to avoid trading with scared money is don't risk any more than 2% of your trading account on any one trade. If you are only risking 2% of your trading account on any one trade, that means the worst thing that can happen is that you're going to lose 100% of 2%. So you're only going to lose 2% of your trading account in that one bad experience. But the good news is you got 9 other trades on, and 7 of them are going to be winners. All right? All right. When is the deadline to sign up? Well, the deadline is, that morning, but please don't wait till then. Don't wait until the last day, because I got some management and processing to do, and I will be, I'll be very busy. So, the sooner you sign up, the better. And I don't anticipate a problem. I think everybody should be able to get in. But I can't take on too many traders. I can't take on too many people, because I give a lot of personal one-on-one assistance. In fact, you'll see in the workshop, we're all going to trade together. We're going to trade together, and then some traders need more hand-holding than other traders. And I will be getting on with traders in live one-on-one conferencing. In fact, I encourage you and everybody to contact me sometime through the workshop experience to have a one-on-one with me, because I can learn so much more about you and how to teach you better and where your shortfalls are and where you and I learned too from, believe me, I don't know everything about trading. I continue to learn. That's one of the reasons I love trading so much, is because I continue to learn. I'm going to have to say goodbye for now. The Double Eagles. I love that picture. Okay, so thanks for your time. Thanks for being here. Thanks for your patience. I hope to see you in the Double Eagle Workshop coming up starting a week from today. Get in now. Get in soon. Don't wait till the last minute. Like I say, have any other questions? Support at doubleeagleworkshop.com. All right, goodbye for now. I'm wishing you all great trading.